The Quotex Trading Strategy to turn $100 into $1,000 in just a few trades. What if you could turn $100 into $1,000 in just a few trades? Sounds unbelievable, right? But with the right strategies, it's more achievable than you think. Whether you're a beginner or an experienced trader, these strategies will give you the edge to dominate the markets. Stick around by the end of this video. You'll have a powerful set of techniques to take your trading to the next level. Number 1. Trend Trading Strategy. Use this strategy when the market moves clearly up or down, often after major news events or during key sessions like London or New York. Avoid it in sideways markets to prevent false signals. The goal is to catch trends early and ride them until signs of reversal appear. This approach suits traders who prefer a set and forget style with minimal monitoring. Here is how to use trend trading strategy. First, identify trends using moving averages or trend lines. Higher highs and lows for uptrends, lower highs and lows for downtrends. Enter trades in the trend's direction, buying in uptrends and selling in downtrends. Set expiration times based on your time frame, e.g., 5 to 15 minutes for short-term trends. Use indicators like RSI or MACD to confirm trend strength before entering a trade. Risk management is crucial in trend trading. Always use stop-loss orders or trade with small amounts to limit potential losses if the trend reverses. Trend trading strategy is ideal for patient traders who can wait for the right opportunities and avoid overtrading. It's also great for beginners because it's straightforward and doesn't require complex analysis. Remember, the trend is your friend until it ends. Number 2. Support and Resistance Strategy. This strategy works best when prices bounce between key levels, acting as barriers where reversals or consolidations occur. It's ideal for ranging markets in periods of low volatility, especially during quieter sessions like the Asian session. Use it when the market moves sideways within a defined range rather than trending strongly. Here is a simple way to use support and resistance strategy. First, identify support, price floor, and resistance, price ceiling using historical price data. When the price nears support, consider a call option, expecting a bounce upward. Near resistance, a put option is ideal as the price is likely to drop. Use candlestick patterns or RSI for confirmation before entering trades. Avoid trading near unclear levels or during high-impact news to prevent false breakouts. Support and resistance strategy best suits disciplined traders who wait for price action at key levels. It's great for analytical traders who prefer careful market observation. Always use small position sizes to protect your capital. Number 3. Martingale Strategy. High risk, be cautious. This high-risk, high-reward strategy is best for experienced traders with a solid risk management plan. It works well in trending markets or when you're confident about a price reversal. Avoid using it if you have limited capital, as it involves doubling your trade size after a loss. Beginners should steer clear as the risk of rapid losses is high. Use this strategy sparingly and only when you have a clear market edge. Here's the process. Start with a small trade size. If you lose, double your investment on the next trade, e.g. 10 to 20 to 40. Keep doubling until you win, then reset to the original trade size. The idea is that a single win recovers all previous losses and earns a profit. For example, after losing 3 trades, 10, 20, 40. If you're finding these strategies helpful, don't forget to hit the like button and subscribe to our channel. We're on a mission to reach 100,000 subscribers this year, and your support means the world to us. Let's grow together and dominate the trading world. Number 4. Price Action Strategy. This strategy works in almost any market condition, trending, ranging, or volatile. It's ideal for traders who prefer to rely on price movement rather than indicators. Use it during active trading sessions when liquidity is high and price movements are more defined. It's especially useful for those who like a clean, uncluttered chart. Let me explain how it works. Analyze price movement and look for key patterns like pin bars, engulfing candles, or inside bars. These signals indicate potential reversals or trend continuations. For example, a bullish engulfing candle at support may suggest a call option. Number 5. RSI and Stochastic Oscillator Strategy. This strategy is great for spotting overbought or oversold conditions, making it ideal for ranging or consolidating markets. It works best when the price moves sideways, as these indicators can give false signals in strong trends. Avoid using it in trending markets where overbought and oversold levels can persist for a long time. Here's the breakdown. Set RSI to 14 and stochastic oscillator to 14.3.3. Look for overbought conditions, RSI above 70, stochastic above 80, to place a put option, and oversold conditions, RSI below 30, stochastic below 20, to place a call option, 20, to place a call option. Stick around because we're just getting started. These next strategies are game changers, especially if you're looking to trade faster or take advantage of market volatility. Don't go anywhere. Your trading success depends on it. Number 6. News Trading Strategy. This strategy is best for traders looking to profit from market volatility caused by major economic events. It works well during high-impact news releases like interest rate decisions, GDP reports, or employment data. These events create sharp price movements, providing quick profit opportunities. Avoid using this strategy during minor news releases or when the market is slow, as price movements may be insignificant. Let's walk through how it works. Monitor an economic calendar to track upcoming high-impact news. Before the release, assess market sentiment and potential outcomes. Once the news is out, watch for strong price movements and trade in the direction of momentum. If the news is positive for an asset, place a call option. If negative, place a put option. Use short expiration times, 1 to 5 minutes, to capitalize on initial volatility. News trading is risky due to unpredictable market reactions. Always use small trade sizes and avoid risking too much on a single trade. Number 7. Bollinger Bands Strategy. This strategy is most effective in ranging or slightly volatile markets where the price moves within a set range and the Bollinger Bands remain narrow. Avoid using it in strong trending markets, as price can hover near the bands for long periods, causing false signals. It's ideal for traders who prefer a visual representation of volatility and price levels. Here is the method behind it. Bollinger Bands include a middle moving average and 2 outer bands, standard deviations. When the price hits the upper band, it may be overbought, signaling a potential put option. If it touches the lower band, it may be oversold, signaling a potential call option. Number 8. 1-minute scalping strategy for fast traders. This strategy is best suited for traders who thrive in high-speed environments. Use it during highly liquid trading sessions, such as the London or New York sessions, when market activity is at its peak. Avoid using it during low-volume periods, as price movement may be too slow for effective scalping. It's ideal for traders who can make quick decisions and manage the stress of rapid trading. Here's how it unfolds. First, focus on short-term price fluctuations and enter trades based on quick signals. Use indicators like moving averages, RSI, or candlestick patterns to identify entry points. For instance, if the price crosses above a moving average and the RSI is rising, place a call option. Set your expiration time to 1 minute and aim for small, consistent profits. Number 9. Fibonacci Retracement Strategy. The Fibonacci retracement strategy is ideal in trending markets, whether in an uptrend or downtrend, to identify potential reversal points. It's not recommended for sideways or choppy markets where Fibonacci levels might fail. This strategy is perfect for traders who enjoy using mathematical tools to predict price movements. Here is the way it works in practice. Start by drawing Fibonacci retracement levels from the swing high to swing low for an uptrend, or from swing low to swing high for a downtrend. The key levels to watch are 38.2%, 50%, and 61.8%. When the price retraces to one of these levels and shows signs of reversal. Number 10. Risk Management Strategy. The risk management strategy is a mindset that should be applied at all times, regardless of market conditions or the strategy being used. It's essential for long-term success in trading. Without it, even the best strategies can result in significant losses. This strategy is crucial for all traders, from beginners to experts. Here's the way it works. Determine how much you're willing to risk on each trade, typically 1 to 2% of your capital. Use stop loss and take profit orders to limit losses and lock in profits. Number 11. Candlestick Patterns Strategy. The candlestick patterns strategy is versatile and works in nearly any market condition. Use it to predict potential reversals or continuations based on price action, especially near key support resistance levels or trend lines. Avoid using it in isolation. Always combine with other tools for confirmation. This strategy is ideal for traders who enjoy analyzing price movements. Here is the process. Look for key candlestick patterns such as doji, hammer, engulfing, or shooting star. For instance, a bullish engulfing pattern at a support level could signal a call option, while a bearish engulfing pattern at a resistance level could signal a put option. Set your expiration time based on the time frame and the pattern's strength. Risk management is crucial. Always use stop-loss orders to limit losses if the pattern fails. Number 12. Breakout Strategy. The breakout strategy is ideal for trading volatile markets, particularly when the price breaks out of key levels. Use it during periods of consolidation, such as triangles, rectangles, or channels. Avoid using it during low volatility periods, where false breakouts are more likely. This strategy suits traders who can act quickly and capitalize on sudden price movements. Here is the method behind it. Identify consolidation patterns and wait for the price to break above resistance or below support. Enter a call option if the price breaks above resistance, or a put option if it breaks below support. Use tools like volume indicator or moving averages to confirm the breakout. Set your expiration time based on the time frame you're trading. Risk management is crucial. Always use stop-loss orders to limit losses if the breakout fails. The breakout strategy is recommended for experienced traders who can handle volatility and make quick decisions. It's also perfect for those who enjoy trading momentum and capturing big moves. Start with small trade sizes and gradually increase as you gain confidence. Number 13. Moving Average Crossover Strategy. The moving average crossover strategy works best in trending markets. Use this strategy when the market is in a clear uptrend or downtrend. Avoid using it during sideways or choppy markets, as it can lead to false signals. This strategy is perfect for traders who prefer a simple and effective approach to trading. Here is how to use this strategy. First, set up two moving averages, a short-term MA, e.g. 9 period, and a long-term MA, e.g. 21 period. Enter a call option when the short-term MA crosses above the long-term MA, bullish signal. Enter a put option when the short-term MA crosses below the long-term MA, bearish signal. Set your expiration time based on the time frame you're trading. Risk management is crucial when using moving averages. Always use stop-loss orders to limit losses if the trend reverses. Moving average crossover strategy is best for patient traders who can wait for clear signals and avoid overtrading. It's also great for beginners because it's straightforward and easy to understand. Start with small trade sizes and gradually increase as you gain confidence. And there you have it. 13 powerful Quotex trading strategies to help you dominate the markets. If you found this video helpful, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you never miss an update. Remember, we're on a mission to reach 100,000 subscribers this year, and your support means everything to us. Thanks for watching and happy trading.